on steel demand and prices at current levels?
So steel demand has been very resilient in the year to date. We calculate that steel demand is up about 9% this year. Now, looking at the end user trends, construction has been very solid so far, and infrastructure has been very strong as well. And then that may reflect the project starts that we have had during the past year or so. And construction starts are starting to slow down, which is something that the market is a little bit concerned about. But with a focus on urbanization and affordable housing likely to be pushed forward, we think that demand should remain fairly resilient. When you look at inventory trends for steel, the current inventory level suggests a fairly balanced market. And as such, steel producers in a balanced market are able to push through cost increases. And that's been the key driver of steel price, the recent steel price rebound of late. Iron ore prices, due to the restocking that's currently occurring in the steel producer system, as well as iron ore traders, that restocking cycle has emerged to take iron ore prices from the lows recently of about $110 to about $130, and that is driving steel prices forward. Now, over the next month or so, we expect that steel output cuts will make the steel market fairly tight, and that should help steel prices to rebound further.
What is your outlook on base metal prices? Would you say it is near bottom, or do you see more pain into prices?
I would say that we're pretty close to the bottom here. As I said previously, we have prices that should trigger involuntary supply cuts, and we should see current prices spur demand. Clearly, it depends on each commodity. Nickel probably has more downside, but we think that copper is bottoming here. And we have already seen that iron ore has already bottomed, and that's pushing both iron ore and steel prices forward. And then in coal, of course, you've got, we need to see more production cuts outside of China, and that should help establish a floor in the coal market within the region.
While there has been decline reported in Shanghai metals inventories, the LME inventories are still higher. How do you read the trend? Does that mean that China perhaps will restock?
Yeah, thanks, Kathy. I think it goes back to my original point that the resilience of Chinese demand has actually been quite positive. And we're seeing that in the trends in Shanghai inventories declining of late, and LME inventories, which is more reflective of the rest of the world demand, has been increasing. At these sort of levels, with prices having pulled back by anywhere from 13 to 20% for commodity prices, we're now at the level where we think it is triggering involuntary production cuts from marginal producers, and it may actually spur underlying demand going forward. So we do think that LME and commodity prices are close to the bottom.